Fed wimps out, sending stocks higher. Here's what you need to know before the bell. The one thing we had said going into the Fed meeting was whether or not the Fed would get very hawkish based on the easing of financial conditions in the markets. Well, they wimped out and didn't do that. In fact, they made the statement that they're really not that concerned about financial conditions in the short term. But that is a very different position than what we saw back in September at Jackson Hole, as well as the December meeting, where financial conditions did matter and they delivered very hawkish statements to try to tighten monetary conditions to slow the economy. But now with inflation seemingly coming down, they're not so concerned about financial conditions. That gave the market a green light to rocket higher yesterday into the close, up about 1%. Now this morning, the NASDAQ is going to be up another 1.5% after Meta's earnings last night, which much better than expected. Basically a year of cost cutting has started to pay off. So Meta's going to be up very sharply this morning. Also not hurting them was the $40 billion share buyback announcement. Buybacks continuing to be the main driver of the market this year. The Buyback Index well outperforming the S&P 500 right now. So companies buying back their shares performing much better than companies that are not doing that. Nonetheless, market starting to push up into fairly overbought conditions. Still on a buy signal currently, but that buy signal is getting very extended here. And our money flow indicator very close to turning over. So while the market may rally a little bit more here, 4,100, 4,110 on the S&P 500, we are starting to get to the level where we're likely going to see a little bit of a correction. So be careful chasing the market right here. Wait for a pullback to add some exposure to the portfolios. But overall, the bullish trends are still very much intact. Rising bottoms, of course. We've talked about the inverse head and shoulders. That has now been completed. And now the 50-day versus the 200-day moving average, that is going to cross probably today, Friday at the latest, and we'll have that golden cross. You're going to see a lot of commentary in the media about the golden cross and how it pretends to higher prices over time. Typically the case, yes, but doesn't mean you don't have a pullback to it first. So again, one thing I'd be looking for here, if you want to add and increase equity exposure in your portfolio, which right now the market trends are bullish, certainly doesn't hurt to add a little bit of exposure here, but wait for a pullback to around 39.60 to 4,000, somewhere in there. Be a good entry point to add a little bit of exposure, assuming the market holds those support levels. That'll be a confirmation of this breakout, as well as confirmation of that golden cross as well. So again, look here for an opportunity on a pullback of weakness to add to companies, and look more for companies that can grow earnings in a slower environment. That's going to be really the key this year as we start to look out as to what sectors and markets will outperform others. And it's going to be a question of disinflation versus inflation. And those are the stocks you want to start looking for. I'm Lance Roberts, and that's what you need to know before the bell.